Let's get a refresher on the rest of the world as we finish up the week. Joining me, Michelle Gibley is the Director of International Research at Charles Schwab. Michelle, great to have you here this afternoon. It seems like when it comes to the rest of the world, they're having a little bit of more complicated political issues than we are, actually.
Yeah, I think it's just really following the trend we've seen all year with governments really struggling in what has been in the past high inflation and in many cases increasing fiscal spending. And so, as you mentioned, both France and Germany have no confidence votes either in the past or upcoming. And that's because of disagreement on fiscal tightening. And it's probably no surprise fiscal tightening is not popular. And so this week we had the French government. We've had these headlines of a so-called government collapse, but bond yields really didn't react much. The French 10-year yield is just 2.87%. It's lower than when snap elections were called in June, lower than it was at the end of last year, and it's even lower than the U.S. 10-year. And French stocks were up 2.5% this week. So, we could have some uncertainty here in France, but it's not really a crisis. And there are potential green shoots, not just in France, but really importantly in Germany.
So, okay, kind of political chaos, but the market did well in France. So it's like they're taking our bad is good routine. What is it? I don't know how to do French version of bad is good. My French is very limited, but that's kind of what it sounds like.
Yeah, that's right. I think for France, it could mean less fiscal tightening next year because with whatever they end up doing, and there is, like I said, some uncertainty in terms of how they govern from here until summer. The budget that was tried to be pushed through won't happen. And so that fiscal tightening won't happen. And then, like I say, in Germany, they're going to have a no confidence vote on December 16th. The chancellor is likely to lose that, and that sets up for election in February. The silver linings for them is that they could be in a stronger position with a new government to address both the soft economy and the threat of new tariffs. And again, here we're really looking at fiscal spending. Reform of the debt brake mechanism is being openly discussed. That could, again, result in less fiscal tightening next year and increase investment for the future. That's something that's hindered the German economy. And also, they could potentially have access to some cheaper energy, both in terms of LNG exports from the U.S. Those are likely to surge in a Trump administration. And the CDU party is moving away from its opposition to nuclear energy. So again, it's like the bad news could be good news. And, for stocks, remember that better or worse matters more than good or bad. And, sentiment is really quite poor toward Europe. So that's an opportunity for investors.
Okay. So it sounds like if they can get some political momentum to get past these votes, then there could be some real meaningful change enacted for Germany. France, I guess, in theory, too. Le mal is le bien, I believe. The bad is good for French. How about ECB, last one, Michelle, which is 50, 25? They're going to keep cutting. Are they going to size it up for the next one?
Yeah, they're getting closer to a 50 basis point cut. They've only been doing 25 basis points so far. 25 is more likely next week. CPI recently ticked higher, but growth is slowed, and is concern that inflation in the Eurozone could overshoot to the downside. So a 50 basis point cut at some point in coming meetings is possible. And they could even reduce rates below the neutral rate, but it's probably not likely at this meeting. Valuations for Eurozone stocks tend to expand when the ECB is cutting rates, and the MSCI EMU index is trading at 13 times next 12 months earnings, and that's a 40% discount to the S&P 500, really quite inexpensive.
All right. Great context for us as I continue to hear a lot of our guests look to international stocks as a place to balance the portfolio. Good context for us. Thanks, Michelle. Definitely, I think, helps also explain the dollar holding its footing this week with so much more political turmoil abroad than here at home, where we had a pretty decisive victory and now expectations of incoming policy.